Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, well I'm back from holiday and it's time to hit the ground running, and there's greatest interest at the moment while I've been away seems to be in the crypto space. So we're going to start our coverage for the week with Bitcoin. So without further ado, let's get underway. We're going to consider bullish and bearish options and alternate counts here, and I will express my personal preference for which one I think is more likely to be correct, and then we will get on with our Elliott wave count and our basic technical analysis. So first thing I want to do before digging into any of this Elliott wave count here on the bearish chart or also here on the bullish chart is I'm just going to come over to the naked chart here, and we're going to set up some basic geometry and levels and fib retracements and things that I want to discuss with you to help support either count. Alright, keep it simple. So first thing I want to point out is a couple of parallel channels. Right, so we have our Elliott wave channel. We're going to bring up our primary count, cycle wave 1, 2, primary wave 1, 2, cycle wave, primary wave 3 completed, now in the primary wave 4, with the potential to go lower from here in an ABC zigzag. We also have another channel, which is our base channel, which is the first channel we put on the chart once we've got our 1 and our 2, because that's the only channel we have available to us until we see a 3, just following Elliott wave theory here. So we go 1, 2, 3. Potential backtest of the base channel is very common. If we cross over with our parallel channel, we can see that the 2 meet here. If we take a target for the price, we can see that we get A equals C or C equals A parity here at 21.299 spot 79. Now how do I get that, and why do I suspect that this confluence is strong enough to determine that Bitcoin will likely fall back to this price? Now I'm expressing my bearish bias. Now I'm not saying the bulls are wrong, they could be right and we could be impulsing out of here going higher. Okay, but we're going to entertain the bearish count first, and I'm going to explain the confluences for the bearish count first before I do the bullish count. The reason I'm doing this is I've been on Twitter not for very long myself. I've not really been a big fan of it, but I've been keeping an ear open and observing the general attitude regarding crypto at the moment in all areas, YouTube, Twitter, whatever. And I am absolutely convinced that the majority mindset is extremely bullish at the moment, extremely bullish since bouncing off the recent lows. Therefore that gets the hairs up on the back of my neck and brings out the natural contrarian in me, who likes to be doing the opposite or thinking the opposite of the herd and taking the opposite position. That doesn't mean it's right, but it just means I want to think that way before I think of joining the overriding opinion. I want to just spend some time thinking the opposite and seeing what I could come up with. So base channel, fib channel and price target here all overlap in the same territory. It's very strong confluence. If we just look at the retracement of the fib level where we've come to off of this move down, we've retraced to exactly the golden ratio, 61.8, and the little overrun here at the 65. If I just zoom in on the smaller time frame here so you can see, here's our move down from a high and here's our retracement up into the golden zone. So all I've done for this price target is take the length of our proposed A, which is this move here. If we just bring up the short-term count for you, we can see 1, 2, 3, 4, 5 into an A, 3, 3, 3 count WXY here into a B, into the 61.8%, and now I've projected 100% the length of the A from the B as the most likely target for a zigzag, bringing us C equals A parity here at 21.299 spot 79, crossing over these fib channels. So that's 3 levels of confluence, 4 if you include the retracement here. So strong evidence, I suggest, that we're going to continue lower. Alright then, so let's also, now that we've done that, let's remove our parallel channels, let's remove our fib retracement, and let's just bring up some price levels. So as we can see, we've got our parity here, which could complete our wave 4 if we complete, like I pointed out, at the edge of this channel, or to backtest this channel, we will complete prior to the previous all-time high. I don't consider that particularly important, but a lot of people who follow Bitcoin say we've never retested the previous all-time high. Well, I would like to remind those people that Bitcoin's what, 12 years old? and the stock market's like 233 years old, or whatever the hell it is. Alright, so you may not have seen previous all-time high tests because you've simply been scaling up into a greater extension from super cycle to primary and so on and so forth. So these all-time highs don't necessarily have any relationship at all with previous all-time highs. If they're in a different wave degree, they're associated with the current wave degree and therefore may not test previous all-time highs at all. But the day may come when that does happen, so we have to be a little bit more open-minded. Therefore we consider it a potential area of support. Previous all-time highs, if we're willing to do it in equities markets and other markets, we should be willing to consider it here in crypto. We just have to keep in mind the young nature of the asset, and therefore why assuming that it will never happen could be a mistake. Alright, so potential target here. Wave 4 invalidation is all the way back at 13885 spot 04. So we can see how with our two fib channels, with our parallel channel and our base channel here, we could complete at target from our golden zone here, avoid the previous all-time high. Like I said, not necessarily significant, but for those who expect that to be avoided, it could be avoided, and we would complete long before invalidating this count at the wave 4. So a lot of confluence here. I'm going to keep saying that. Alright, so let's just remove that price target as well. So the next thing we want to look at is the bear with me. Okay, the grand pitchfork here off of the primary wave 1, 2, swing high, swing low. So as I just pointed out, here's down wave 4. We don't have to go to the all-time high. We don't have, and we can stay well above invalidation. But another, just like with the fib channels, just like with the target, let's bring it back up. Here's the target here, the white line. This is a fifth piece of confluence. We could come to backtest the outside of the pitchfork, stay above the all-time high, stay legal, backtest the base channel, hit the parallel channel, hit the edge of this pitchfork, hit this price target. Another piece of confluence. Now, another thing that I like about this bearish interpretation, and it's only bearish short term. I don't want you guys to get the wrong impression. I am loaded up to the frickin' you know what with Bitcoin and with crypto. I accumulated like crazy during 2019 and bottom of 18 through to 20, and have been accumulating here on the off chance that everything I'm telling you now is completely wrong and we are bullish again. I will accumulate on the dips, and that tends to be how I behave with crypto, because it sounds a bit counterproductive, I guess, because people say, well, you're a trader, Tom, so why shouldn't you be trading it? Well, here's my logic. Any asset which can double, triple, quadruple, tenfold even, in a very short time period, that's a lot of stress and pressure to be putting yourself under to try and pick the timing of that. I'd rather have a greater understanding of where I think I am in the overall count, the possibility of it going lower for me to accumulate more, and then just do that, because I don't want that pressure. Basically, and I'm sure there are guys out there who are much better traders than me at picking those time frames and getting it right, and good for you, that's brilliant. But for me, this is just a little too much gain to miss out on if I time it badly. So I'd rather just be a bit of a hodler, to be honest. I do trade it occasionally. I'd be lying if I said I didn't. I've shown that to my Patreon subscribers that I have on occasion traded it, but I, as a rule, prefer to just accumulate. And on that point, before people start trying to hang me for being bearish, I'm uber bullish. I wouldn't be calling this a wave 4 at primary degree if I wasn't uber bullish, would I? Okay, so I'm expecting it to go insanely higher over the years to come. So just keep that in mind before you get your hair off and get annoyed with me for being potentially bearish in the short term. So anyway, fib retracement levels was the next thing I want to talk about. We've shown the golden zone retracement here to the 61, but you'll notice another piece of confluence. Now we had the deep 2 over 90%, so a shallow 4, 23.6 to 38.2 is a good example of alternation. When we're looking at alternation in Elliott wave, we want to see alternation of form in terms of the count we apply to the corrective waves 2 and 4, but we also want to see alternation in time, and we want to see alternation in severity. Now, they don't always have to all come together, but the more forms of alternation there is, the more comfortable we can feel with our interpretation of where we are in the broader count. Now, on that basis, a 23.6% retracement, which we've come to, is an argument in the case of the camp for the bulls, because we had a 90% retracement in 2, very shallow wave 4 here, we had a long-term retracement in the wave 2, right, going on for 263 days, and I think somewhere around the high 60s for the current. Let's have a look. 71 actually. Let's say 71 days. So very short, next to very long. So there's alternation all over the place. Alternation in depth, relative. Alternation in time frame, relative. Alternation in form, relative as well. So we can see that there is a case for the bulls here that we've bottomed around the 23.6. But I would argue that even with another move down to parity here, to the 38.2 territory, to the edge of the fib, to the edge of the Elliott wave channel, to the edge of the base channel, within the edge of that pitchfork, all of those areas of confluence, it's still 38.2 next to 90%. It's still shallow, right? Even if we take the time frame to my proposal here, it's still 205 days next to, what did I say, 280? I can't remember now. Next to 261.59, somewhere in that region. So it's still shorter. And let's say you came down in a hurry, like this. You could chop another 30 days off of that. Right? We don't know. So we've still got alternation in form, alternation in depth, and some alternation in time if we were to go lower. So still valid, in my opinion. So let's hide that. Is there anything else I wanted to discuss on this chart? I've discussed the price targets, I've discussed the count as it was here. So yeah, that's basically my take on the situation at the moment. I am still, for the moment, leaning a little more bearishly. It is driven by a natural contrarianism. That's one of my biases. As a person, I have to be aware of that, because it could be wrong. But yes, some degree of contrarianism is driving this thinking at the moment, but there is a lot of confluence evidence for that opinion. Now, if we go higher through the 61.65 and we go through the 78.6, then it's likely I'm wrong in this interpretation and that we're bullish, and that's why we also interpret and have a bullish count. So I'm willing to accept that the bulls could be spot on here, but I just feel the evidence is more strongly in favour of a short-term bearish interpretation at least. So on that note, let's come over and have a quick look at the more detailed counts. I'll just save this here. Okay, so here's your bullish interpretation. So let's see what we can pick out here that we like the look of. So I'm saying in the bullish interpretation, if you can dig out a WXY in here, or you can dig out some alternative correction to the wave 2 which you're happy with, be my guest. For me, I'm still sticking with the ABC expanding flat 3, 3, 5 with a very extreme extension in the C. Very extreme. Now, some people just reject that out of hand and say, well, Elliott said if it goes past the 1618, it's not a C. I found no evidence of that ever being said. And I've read the Elliott wave principle time and time again, and all I find is a guideline, not a rule, suggesting that if an extension in a C were to go beyond the 161.8% extension of the A, then we should be suspicious of it being something else, but no hard rule saying it has to be. So it is possible. And on that basis, we placed a pitchfork, a shift pitchfork, as this is corrective, based on the assumption that we were looking at an A, B, C, swing low, swing high, external correction, to this initial A wave here. So let's just see if we can. Okay, you're going to have to bear with me. Okay, so here it is. A, B, C, bottoming here. I think we'd be better off looking at this on the naked chart. Have I got a pitchfork for this one? Yes, I have. So just to get rid of all the Elliott wave count for a moment, let's just zoom in and have a look at this. Let's have a flip this over to the simpler version. Okay, so from the high, swing low, swing high, external B, down to the median line, up to the outer bound, through the median line. You could argue a back test here maybe, but I wouldn't say. I'd say this here is the back test of the median line. Outer bound, median line, outer bound, channeling somewhere around the 61.8, bouncing off this 38.2 level here, thrust through the median line, back test the 38.2 here, 1, 2, 3 candles in a row, and up we go, breaking this pitchfork. That's quite bullish. So I give the bulls the benefit of the doubt here that if all corrective price action has been contained within a three-way swing of this shift pitchfork, then you could argue the low's in, and this is an impulsive move outside of that corrective geometry. But there is a reason, guys, that we have an outer bound, an extreme outer bound, because sometimes conditions can get extreme, okay, before reversing or before continuing trend. You know, it's less likely, hence why it's an extreme condition, but it's there for a reason. We know, and once we get beyond this extreme outer bound, then fair enough. We've made a new high by then, pretty much. And at which point, arguing that this was 5 waves is technically, by rules of Elliott wave, impossible. It would have to have been a 3-wave structure to have an expansive move higher. Okay, so which I don't think is what we're looking at here. Right, so there's a little argument for the bulls as well. Is there anything else I want to look at here? You could argue this is a back test of the median line, this is the test of the 38, this is a move up through and back test of the median line. So, I mean, we're still well within the established pitchfork off of the primary wave swing 1, swing 2, but we could still easily come down and still way stay bullish for the long term, stay within the confines of this market. So let's have a little talk about how we'd interpret the move off of the low if we are being bullish. Okay, we've already spoken about the bearish one. It's WXY complete. And then we're going to move lower. Let's just hide this out of the way. Get rid of the object tree. So the only way I can really see this is I don't want to count this to where I've got the X as a 1, because this looks like a 3-wave swing all day. Okay, it just looks like 3 waves. The only way I can get up excuse me, is to, I don't even want to consider this a 1, because this looks like a 3-way swing all day. So if we come down to a small enough time frame, down to the 5-minute, 15-minute, we can get a completed 5-wave move into a 1 here with, oh bloody hell, go away. We can get all the way up into a intermediate 1 here with no overlap, with a 1, 2, 3, 4, 5. I will come down to 5 minutes for a moment, just to go all the way back to show you what I mean. So I'm not cheating by not including it, okay, by hiding behind larger time frames. So now you can see it, yeah? It's here's a low, bum, 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 bum. Now you can either say this is a 5, right, and this is some form of corrective move into our broader interpretation of the intermediate 2, or you can say that this is some kind of long sideways shit, as I like to call it, WXYZ or whatever the hell it is, and then this results in the completion of a 5th wave into a 1 here. But either way, you can argue for a 5-wave structure at this time frame. Okay, you can argue for it. 1, 2, whether this is the 3, 4, and this is another 1, 2, 3, 4, or whether this is the 3, 4, 5, you can get a 5-wave structure in here. Whereas if you try to interpret this as part of the swing, it breaks down, in my opinion. It just so I prefer to see this as a 3-wave expanding flat into the beginning of our W. So so 3 waves, right? Because we're saying A. This is, I don't know, some kind of 3-wave move to here, or maybe there's a zigzag here, and it's 5, 3, 5 zigzag into an expansive B. And then I'd say more clearly, you can have a 5-wave structure for the C to get your first 3-wave move into a W. Okay, so that's how I'm interpreting that. Let's come back out to the daily for a moment. I've gone a bit too far. Way too far, excuse me. So getting back to recent price action. So there we go. We get a 5-wave move into a 1. We get that expansive move into a W, X, and then this is another zigzag into a Y. To complete our 2. WXY. 1, 2. The problem we've got here next is the Fibonacci extension of the 1 from the 2 to find the 3. Because we're saying the 1's back here and not up here, that means we're going to get much more extreme because of the depth of the 2. We're going to get much less room to run in a wave 3 target. Let's just come into linear since we're working in this time frame for the moment. So 1618 is here and we've already gone through it. So does this, let's just have a look at it for a moment and see if this feels right. So what we're going to do is we're just going to drag what we've just drawn to one side and say, does that look like an impulse wave to you? Of the same wave degree. So is that an intermediate wave degree complete? It doesn't look like it to me. That looks like shit. So that looks to me like an extension, yeah? If you're a Patreon member, obviously you'll follow the Elliott Wave series I produce, and one of the episodes was on Elliott Wave extensions. That looks like an extension or a correction, right? It does not look like a impulse wave of the same wave degree. Not at all. Not to my eyes. So I'm not saying 1, 2, okay, 1, 2, 3, no way. I'm just not buying that. So the way I've got to look at this is as a wave 3 extension, which should always be our primary assumption. In the wave 1, the wave 3, the wave 5, we should look to a wave 3 extension at smaller degree and smaller time frame first before we consider an alternative, especially when we get this kind of setup. So 1, 2, 1, 2, 3, 4, 5, 3, 4, 5, 5, 1. Right, to work our way from intermediate, this is minor, back to intermediate, to primary, to cycle, to complete at much higher levels. Right, so if this is 1, 2, and this is 1, 2, maybe you could argue this is 1, 2, and this is 1, 2, 3, 4, 5, 1, 2, minute degree, minor degree, then we're getting crazy bullish at that point in terms of how extended this initial move is. So if this is a 1, 2 at minor degree, let's project it as an extension and say, alright, let's get typical move 1618 to a 3 at minor degree would take us to a new all-time high. At that point, the argument's out and the bulls were right. Okay? Because this is not a 3-wave structure we're interpreting it as. We're interpreting this as a 5-wave move, right? So if we were, the only thing we could do would be to say to take our extreme ABC we were talking about. This would then have to now become some kind of extreme ABC, and then you'd have a flat pattern 5 waves down. Now I feel like I'm taking one bad assumption or one extreme assumption and then applying another one to the situation and compounding it further. I don't like that, so let's try and keep it simpler in the meantime. If this is a 1, 2, 1, 2 extension into a 3, this will fucking rocket. Pardon my language, sorry. This will rocket up. Okay, and the bulls will have their validation because this won't turn lower, and especially won't come back down here because this is our bullish invalidation point at 29325. This initial 1-2 move is incorrect below this level, right? So if we've come up here and gone 1-2, we will just move up 3, 4, and we will continue flying. I would become very suspicious. If I was a bull, I'm already leaning more on the side that we're going to come down lower. But if you're a bull and you've come up in a 1-2, if you start coming down here, you gotta get nervous because that's starting to look very suspicious. Okay, because if this is a 1-2 an intermediate degree, minor degree should be remaining, excuse me, within the geometry set up by that swing high, swing low. Now, what do I mean by that? So, what I mean is this. This is a 1, this is a 2, then all subsequent minor wave degree movement within the intermediate 3 should remain within the confines of this pitchfork. Now that's a pretty big area, isn't it, really? Because if this is a 1-2, well, the 3 could come up to here to be out of bound, the 4 could come across to the median line, the 5 could push higher, right? Or even, hence why I mentioned earlier, we have the extreme out of bound. You could go 1, 2, 3 all the way up to the extreme out of bound. 4 could bring you to the median line, and then 5. You see, so but you should contain. I won't say will, because that's assuming it's. I'm assuming this interpretation is spot on, which we should never do, but it should, if this is right, contain all future price action leading up until the completion of that intermediate degree, which would be the completion of intermediate 3. Okay, so at intermediate degree, making the median line gives us an 80% probability. So perhaps we're looking at the time frame wrong here. So intermediate degree, let's place it on the median line, give it the benefit of the doubt. 4, we can push out what to the median. Well, it doesn't matter. The 4 can come way outside of it because we've completed the wave 3. Right, 1, 2, 3, 4. We're not at primary degree. We're talking intermediate degree to find our 3. So 4 could retain inside of it. 4 could collapse out of it. It just can't overlap the 1, which would be all the way back here. So 80% probability of making the median line. If this 1-2 pivot is bullish, and this is correct. Like I said, not where I'm leaning. I feel this is more likely corrective, but there you go. Alright then, so that's our bullish interpretation. Expanding flat pattern complete. 1-2, 1-2, going into a wave 3 extension at intermediate degree of primary degree 5 of cycle wave 1 going much higher. If the bulls are right, and this interpretation of their belief is correct, then we will just continue rocketing up here. Nothing's going to stop us. But now that we're in a wave 3, we're just going to fly up here. Price starts to break down. I think you've got to start getting a little more bearish, a little more suspicious of what's going on. Alright then, and the bearish interpretation I've already explained, which is, 1, 2, 3, 4, 5 down A, W, X, Y, B into the golden ratio, and down we come to test the base channel to find this parity, to find the edge of the pitchfork, to find the edge of the parallel channel, to find the 38.2% retracement. All of those things are there. Right, that's it for the Elliott wave count and our analysis. So let's just bring up some basic analysis now. This seems to be what's driving a lot of the bullishness. Talk of golden crosses, moving averages and stuff, and all that's cool. That could be right. Let's just come out to the weekly time frame. Okay, and let's bring up the 10 exponential moving average 20, 60, 250 in yellow, blue, orange and green respectively. Right, so, and let's bring up our momentum indicators. We have an RSI set to a 10 close, with the green 30 level representing oversold and the red 70 level representing overbought. We have a MACD with our 10 for the short term signal and a 20 for the long term average here in blue and orange respectively. What can we see here? Well, on the weekly time frame, we had the price come back to test the 60 exponential moving average, which we know is the 23.6% retracement of the primary wave 3 in log scale where we found support. So, argument for the bulls, right? Okay, very strong engulfing bullish candle on the week here of the 19th of July, where we've traded outside the previous candle's range and consumed all of the previous week's price data and closed higher with a bullish wick to the downside at major exponential moving average support. That's very bullish. Very bullish, but only for the short term. It could be the beginning of something bigger, but a reversal like this should only ever be interpreted as a reversal for the short term. It may be significant in the longer term, but we won't know. we don't have a crystal ball. We won't know until we look back at it in months to come and go, oh yeah, that was it. So whenever you get a big bullish reversal candle, yes, you can be bullish, but let's not jump the gun and be bullish for the next year. Let's be bullish for the next week and maybe the next month, and look at it like that instead. So we got a nice bullish candle which took us off the 60 through the 10 through the 20, looking to cross the 10 back above the 20 now with the price above it. If that were to happen, you could say bullish in the short term also, but you know how I feel about moving averages crossing over one another and what they represent. We'll talk about that in the day time frame in a moment. Okay, so as I pointed out also previously, I like to see round trips in the RSI. This is cycle wave degree, we're saying. Here, 2017 top to 2018 low. We spend so much time overbought, it's just silly. And then we go from overbought to oversold, right? Bum, bum, round trip, 1, 2. Primary wave degree, 1, 2, overbought, oversold, round trip again. Wave 4 has not made it back to oversold conditions. Now, like I said, deep wave 2, shallow wave 4, perhaps we don't need to. Perhaps we don't need to, perhaps the bulls are right. Double bottom here, going higher. I just can't shake my contrarianism, I'm afraid. But either way, let's come down now and have a look at the MACD. So what have we got here on the MACD? Well, this big bullish move here. Look at the swing here. So if you're part of the Patreon and you follow the Elliott Wave series and you follow my analysis, you'll know that I'm looking for the peak of the momentum and confirmation RSI and MACD to find our wave 3. Well, I'd argue that's absolutely undeniable, right? So I would not be expecting the wave 5 to come back above these levels in terms of momentum. Price, I expect it to go way higher, but I would expect to see a divergence build up in that fifth and final wave in our momentum indicators. And we can see that the line we set here at the top of the wave 3 of the 3, I think. 1, 2. Yeah, here's the 3 of the 3, right? So this should be the peak of our momentum, and I'm pretty sure, beyond the shadow of a doubt, that in this wave degree, 1, 2, 3, it is easily the highest peak and coincides with the peak of the MACD. So this was the 3 of the 3. This is the divergence between the 3 and then 4, 5. I guess actually no, this is the ending diagonal, isn't it? So this is 1, 2, 3, 4, 5. So we get a gigantic divergence. I remember mentioning it in the weeks prior to the correction. If you go back and watch some of my older videos, we had this big, strong bearish divergence which led to this correction. And no thrust down into oversold. I'm not saying it has happened, just leaves me a little suspicious. So yeah, either way, there you go. That's all the evidence you need for me to convince you that I'm extremely bullish long term. This is a 3 coming into a 4, so the fifth is to come at a higher cycle degree. That's the opportunity. That's the time to get out, in my opinion. Not financial or trading advice. That's the time to get out, convert back into whatever you want to do, whether it's DeFi and you want to make some interest, or whether you just want to get back into cash, or whatever it is. That's the time to do it, and that's on the horizon in the next few months, regardless of whether we've bottomed or not. Because whether we've gone bottomed and then boom, or whether we're going to go bum, 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 and then boom, I'm still bullish long term. Just in the shorter term, I favour another move lower. That's it. So let's come down to the daytime frame. Okay, what can we see here on the daytime frame? Right, so price pushing back above all the exponential moving averages. 10, 20 and 60, all of them through the 250. This, you no doubt heard it, this is what we call a golden cross right here. So everyone's super bullish, uber bullish. But as I pointed out, golden crosses and bearish crosses often don't symbolize continuation of that psychology or that disposition. It actually normally symbolizes a reversal. Hence why I think it's bogus analysis. I don't like it because it misleads people and causes unnecessary fear and unnecessary exuberance, which can really hurt people. So I don't like looking at it that way. For example, here's our death cross, right? 60 on the daily, crossing through the 250 with the price below it. Here's our death cross. Oh God, Bitcoin is death cross. It's the end of the world. Sell. Now let's say you did that. Just 4 days later, the market bottomed and bounced. So the death cross was actually a leading indicator of the bottom just by 4 days. What a shame if you got convinced by such a silly signal to sell at that point. Never sell or buy. Okay, I'm going to say it again, not trading or financial advice, because you do what you do. You do what you want to do. You believe the analysis you want to believe. But me personally, I would never buy or sell based off of a golden or death cross, because I've just seen it too many times signify the opposite. Not always, but just a lot of the time. Too often to consider it a useful form of analysis. Right, so RSI, we don't know if these are highs or just subwaves of a greater wave 3 like we've spoken about bullishly. If this is a high at the 61A, then we do have divergence, bearish divergence between this high and these subsequent highs here on the RSI on the daytime frame, suggesting weakness before breaking down. That would support the bearish case, which is the one I'm more biased to at the moment. Divergence here in RSI, no divergence to speak of in the MACD indicator here, so we haven't got confirmation, and we're still holding above the moving averages. So as I train, or not train, as I teach with my standard trade setup system, or standard trade setup, the STS as I call it, on the Patreon, it doesn't matter whether you're trading a 3 or whether you're trading a C, because you can't see the future, right? You don't know, you're not psychic. But what you can do is whether this is a 1, 2, 3, or whether this is a WXY or ABC, it doesn't matter. If you buy this pivot, this retracement, using the setup of a 50 to 61% retracement and then a smaller time frame to set up the trade and the stop, you'd already be in and going higher, right? So it doesn't really matter to you at this point whether this is a C or a Y or even a 3. You're in, your stop's now in profit by this point, and now all you've got to do is just sit here and wait to see what develops. Okay, so my point being is, we won't know until we know, but my bias is towards the bearish count. I'm just simply pointing out that you can have a bearish interpretation and still trade bullishly, because while price is bullish, it's bullish, isn't it? So why fight it? We just don't know if it's permanent or temporary or the time frame, but we just know the price action in the short term. We're above all the major moving averages, we're trending higher, it's bullish in the short term. That does not mean it's bullish in the next week or the next month, but there was an opportunity to trade this bullishly. Right then, so I'm going to leave it there, guys, now. I think I've done more than enough to try and bring you up to speed. I will hold my hands up and say, if we make a new high and we smash through the 61A and then the 78.6, just keep pushing and pushing and pushing. The bulls were spot on and we bottomed. Well done, guys. Brilliant. I hope you accumulated around here, around the lows, like I always do around the lows. And if you did manage to get a bullish trade on, good for you. But my bias in the short term is for another move lower. That's it. Don't hang me for saying it. This is just technical analysis, looking at the charts, interpreting the count, looking at levels and confluence. And for me, I just suspect another move lower. Alright then, guys, let's leave it there. If you're new to the channel, if you like what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Leave us a comment in the comment section below, but only if you want to. If you're a patron, thank you so much for being so respectful during my holiday and respecting my privacy. I really appreciate it. I will be back working for you guys non-stop now, bringing you up to speed. If you're interested in becoming a patron, there's a link in the Patreon. There's a link in the description box below to the Patreon. Go over, have a look at the different tiers, see if there's anything you're interested in. And also, if you're not following me on Twitter yet, there's a link also to my Twitter feed in the description box below. Alright guys, take care, and I'll be back with you later in the week. All the best. Bye bye.